Isaac Boltanski from BTIG, he noted some of the concern that might come with delayed government data that the Fed might actually be closely watching, and delayed economic data if we do have a shutdown and we don't have people putting these reports out in as timely of a manner. Is that a concern, you think, for the Fed and some of the decision making that affects markets?
Sure. So for the Fed, I mean, this would come at, we have the meeting, obviously, the FOMC meeting this week, that coincides with the UAW strike, which you covered in the last segment, and a potential government shutdown. And with the government shutdown, the potential for a lack of economic data coming out as non-essential services get shelved for temporarily. That could be an excuse for policymakers to pause, right? The uncertainty of the fallout from the strike, the uncertainty of any economic impact, and the lack of data. For a Fed that's data dependent, if they're not getting data, they may just decide to pause a little while. And I think that's kind of what the markets have baked in right now anyway. So yeah, it's an inconvenience for policymakers who are looking for economic data. A prolonged shutdown could leave them blind a little bit for a couple of weeks.
And there are some things that happen sort of on the edges of these shutdowns, things like if you're trying to apply for a small business loan, if you're trying to get your passport process. But in terms of economic impact versus market impact, we should really be focusing on the economic impact at this stage.
Okay, there are a lot of inconveniences and nuisances that come along with a government shutdown. I don't want to belittle them. You're going to have government employees who are not going to get paid during the shutdown. That's a hardship for them and their families. And so that's a real issue. At the same time, all that back pay and all the inconveniences that go on during the shutdown, they're all made whole once the government reopens. So it's a very temporary economic event and doesn't lead to long-term economic impacts. The government employee, the government worker that doesn't get paid for, let's just say, 3 weeks, that 3 weeks of non-pay will be made up once the government reopens. So the economic impacts really are so small. It's that's why I think investors look past this as a market event and discount it.